Welcome to The Explainer. Today, we're going to follow a really interesting thread. It starts with something you might not expect, a weird spike in the silver market, but it leads us to a global tech arms race and maybe a complete shakeup of world power. Okay, let's dive right in.
So our story kicks off with a simple commodity, silver. But right now, it's behaving in a really unusual way. You can almost say it's acting like a canary in the coal mine for the entire financial system.
In this quote, it really hits the nail on the head. It points to this huge shift in how we figure out what things are worth. For so long, financial markets, traders, set the price. But that's changing. Now, what's starting to matter more is physical control. Who actually has the metal?
And this slide really gets to the heart of it. You see, for decades, the West has pretty much treated silver like a number on a screen, just another financial asset to trade. But its real fundamental value is now being driven by how it's used in industry, and that's an area where countries like China are showing an intense strategic focus.
So what's going on? This isn't just about making more forks or jewelry. Something much, much bigger is sucking up huge amounts of silver and other physical resources, and it's happening faster and faster. And that brings us to the real engine of this new era.
So the answer? It's the next great industrial revolution. It's this move from digital AI that just lives in the cloud to what's being called physical AI, AI that actually operates in the real world. We're talking about a massive explosion in robotics and automation. And these machines, they're hungry. They need immense amounts of physical resources, especially conductive metals like silver for all their advanced electronics.
And if you want to know the scale of this revolution, look no further than the recent CES Tech Show. Boston Dynamics' famous Atlas robot? It's moving from cool viral videos to the factory floor. The plans for mass production are just staggering. Hyundai, its parent company, wants to be churning out 30,000 of these robots a year. And this chart just perfectly illustrates the race that's underway. While Western companies get a lot of headlines, Chinese firms are already shipping humanoid robots in volumes that blow their competitors out of the water. I mean, look at this. Agibot shipped its 5,000th robot at the end of 2025. Meanwhile, Tesla's estimated to have made only a few hundred. The scale and the speed are just on another level. And you've got to understand, tech giants like NVIDIA aren't just selling chips anymore. They're building the entire ecosystem from start to finish. It's like a virtual factory for creating and deploying physical AI on a global scale. From simulating physics to training robots in a virtual world before they're even built, this is a systematic pipeline for mass-producing intelligent machines.
So, if this is the tech pipeline for the future, who's building it? Who's really benefiting from this resource-hungry, AI-driven world? Well, some analyses point not to individual countries, but to a powerful network of global players all working together.
One analysis we looked at argues that this isn't just a simple US versus China story. It describes a new force, what it calls transnational capital. Think of it as a network of financial power, energy producers, tech giants, and state-backed projects that all invest with each other across borders. They use these massive flows of money to direct resources toward their shared goals, almost like they're a country unto themselves.
But here's the catch. This massive, incredible technological future is being built on an incredibly fragile foundation, the global financial system itself. And to really get a handle on the risk here, we can look at a powerful idea from academic research on banking.
The key concept is called moral hazard. It sounds complicated, but it's pretty simple. It's when having a safety net, like deposit insurance for a bank, actually encourages you to take the very risks it's supposed to protect you from. I mean, if you know you'll get bailed out, why not take bigger risks to get bigger rewards, right?
So, a World Bank paper that studied the 2008 financial crisis found that deposit insurance kind of has two opposing effects. In normal, good times, it encourages banks to take on dangerous levels of risk. But during a panic, it provides crucial stability and stops everyone from pulling their money out at once.
But, and this is the absolute kicker, when they looked at the whole cycle, both the good times and the bad, the destabilizing effect from all that risk-taking was actually greater than the stabilizing one. Basically, the safety net over time made the whole system less stable. This is a great way to think about the entire global financial system, which is basically built on the idea that central banks will always step in. It's a system that's hardwired to encourage risk.
Okay, so let's connect the dots. We've got a race for physical resources, the rise of this transnational capital class, and a global financial system that practically begs for massive risk-taking.
When you put all those pieces together, some analyses are suggesting we're watching a deliberate, managed reconfiguration of the entire global order.
Now, one pretty provocative geopolitical theory we looked at argues that a lot of the crises we see on the news aren't random at all. This perspective suggests they could be part of a controlled demolition of the old system, all designed to transfer assets and power. The goal, according to this view, is to get the world ready for a new AI-centric reality, where physical stuff and production are what really matter.
You know, the crucial point here is that this idea of building power through economic deals and financial influence instead of just with armies, it's not new at all. It has a deep history. So what we might be seeing today is just an evolution of a very old strategy, but with a brand new set of global players.
So after this whole journey, starting from a squeeze on silver and ending up at a global AI arms race built on a super risky financial system, what are the big takeaways from all this?
First, and this is probably the most important thing, what you can physically control, energy, minerals, factories, robots, is becoming way more important than numbers on a spreadsheet. The world of paper assets is starting to give way to the world of physical reality.
And the second key takeaway is this. The primary actors on the world stage might not be countries with flags anymore. It might be these global networks that have immense financial and technological power to shape the future however they want.
Which leaves us with one final, pretty provocative question for you to think about. As these enormous shifts play out, in a world of physical AI and transnational capital, what does individual sovereignty even mean? Thanks for joining this explainer.